What's up, guys? Welcome to another episode of Inside Traders. I am your host, Caleb. Like I like to say, I'm a retired engineer turned degenerate option trader. And on this show, I'm going to share some of the secrets of the market that I found, such as they are, and talk about, anything market related that interests me, mostly crypto and Tesla, to be honest. So welcome to the show. Today's episode is brought to you by ketamine. And not just any ketamine, Elon Musk's very own ketamine. So thank you very much for sponsoring the show and for drugs. So for real, what I want to talk about today is this continued dip in Tesla and kind of how I'm positioning and some of the new ETF tools that have been released that let you kind of go long and short at the same time. So you can kind of like maintain this long growth exposure while kind of like getting paid to wait for Tesla. And then I want to talk a little bit about the EV winter in general and why I think that could be the case. And we couldn't go a single episode, just like the news, without bringing NVIDIA into the story. And it's because it's all related. Tesla, AI, NVIDIA, chips, EVs, batteries, power, technology, it's all the same thing. And so we're going to get into it. So like, let's start with the Tesla dip. What is going on? Well, I have been talking about what I think people are doing because there is always a limited amount of money in the markets. Okay. So like, if people want to buy up chips and pump that to the moon and, get everyone to buy up along with it and then eventually dump on them, which is what they will do. They will do that with chips. I don't know when, but it's going to happen. What are they funding all those chip buys with? They're funding it with EVs. They can't fund it with, so like, here's what I think is happening. I think that you see these like run-ups in these stocks, that are just unbelievable. 30%, 50%, a doubling. Well, how did these things even happen to begin with? First of all, I think a lot of that has to do with leverage in the options market. That's like an entire 5-hour discussion on its own, easy, or longer with experts. I can't even tell you. I just think that they're related. What I also think is happening is that there are market participants that are specifically selling some sectors and using those credits to buy up other sectors. And then they just flip the script and they reverse it and they'll sell down the other to buy up another one. And it's basically this giant pump and dump that I think is happening, partially because I see it in the order flow. If you don't know, you can actually see all the stock and options as they're being traded every day. It's called the flow. Well, it's called the tape. It's called the tape. Historically, it's always been called the tape. It's like a very long-lived practice. Traders have always been doing it for hundreds and hundreds of years. They have been communicating about the price of different goods and services across distances to better create price decisions. And so you can read the tape today. Basically, you can buy access to the order flow. The one I like to pay for is Cheddar Flow. And there's a few of them, but that's the one I use. And basically, you'll get live feeds of all the unusual option events, and then you can explore that historical data. And what you see are like clear manipulation in the data. There's almost never a day where they're not calling up SPY, where they're not putting QQQ. I think they found ways to play these indexes and then the underlyings in a really interesting way. I haven't fully figured that out. I just realized this. Okay, so we are live. We're live. Welcome. And so I haven't fully figured out that how they play the indexes so that they're selling on the index, but then buying the underlying, like they'll buy up NVIDIA, Apple, Tesla, Google, Facebook, whatever the top companies of the SPY and QQQ are. Somehow there's some market manipulation happening there. Like you could just see it by the data. I can't quite explain what it is. Or hedging, could just be hedging, but still, like there is, I think, some unprecedented things happening with markets today. And this Tesla decline is one of them. And so It's pretty exciting if you ask me. But yeah, like, why is Tesla going down? Well, they were probably higher than they should have been or whatever. I wouldn't even agree with that. But like, they are going down because there's no good news and there's not enough buyers. There's more sellers than buyers. Why does anything go down? So unless there is like some positive catalyst to the upside, or there's just a lot more market participants that begin buying, which I think both are likely to happen within the next 6 months, then Tesla will continue to trade sideways or whatever. But we know this stock, when Tesla rips, it's Bitcoin. It's the exact same thing. When it tears, it's going to go, it'll double. It'll fucking double. It's going to go above 300, especially if it goes below 150. The counter move will be extreme. And so Tesla is destined for the moon. You should know that. If you think otherwise, leave a comment and let me destroy you. Oh my God, will I destroy you? And so, but for real, leave a comment. Tell me why. Tell me why. I would love to have that debate, even though it's been debated endlessly on Twitter. Let's bring that debate into my comment thread. So yeah, Tesla is gearing up for a massive run. Now, we are in a very technical decline of lower lows and lower highs. And so how I'm playing it, which I'm pretty excited about this, is because I use margin, and Tesla is like not good for margins at all. It's really bad for margins. But you want to know what is really good for margins is TSLY, the YieldMax dividend fund. I'm getting pretty into these YieldMax ETFs. I think they are an interesting play. I'll explain to you really quickly what these YieldMax ETFs do. So basically, they run a synthetic covered call strategy to generate additional income in your portfolio that is unrelated to the dividends that you would receive from stocks or the payments from bonds. So it's another source of income. It's a diversified income source. So remember, a lot of investing is about diversity. You want to diversify a lot of things. One of the things people don't think about diversifying, but you should, is your income. For obvious reasons, you should do that. And so dividends, but what I like about these YieldMax funds, and I've tried to do this strategy myself, it's not easy, is they are providing real-time monthly income while providing some positive price exposure. But they provide also a lot of negative price exposure because of how the dividends yield. So like anytime they do a distribution, that's going to come right out of the stock price. Now, if you're holding something like NVIDIA and they're writing calls on that, well, like first of all, you probably miss out on like half or more of the returns of the absolute underlying stock. But that whole time you're seeing increasing dividends, you're seeing increasing prices. All things are up and to the right. It's great. On TSLY, it's the exact opposite story because it's been in a decline. And they've had a reverse stock split recently. So on TSLY, you're seeing these distributions in the dividends at the same time as the stock is getting nuked. And so basically this makes me like giddy to buy TSLY because there's never been a better price. Every day that I buy TSLY is like the lowest price anyone has ever gotten on it. And you better believe I'm going to be holding those because the dividends are going to go extreme. Here's why the dividends are awesome. It's like, this is what I like about the YieldMaxes. I understand like when you get paid through these dividends, they're taking it from the underlying and you're like reducing equity. It's like the same as like if you're working at a startup, I think, and they issue additional shares. Everyone gets diluted. And so your shares basically aren't worth as much. And I understand that. But like, who gives a shit? Because those fucking premiums are so rich that you could do one of two things. One, you could just like wait for the ideal time to buy, which would be after the distribution, which is when everyone's going to sell. You couple that with a day that Tesla is down, you could buy TSLY at 10% off what you just got a distribution on. Easy. And so like if you just hold that cash, you could throw it in a T-bill, right? I wouldn't do that. I'd obviously buy call options with it, but like, you could throw it in a D-bill and just get a yield on it until you're ready to redeploy it back into TSLY and get your overall position. So like, it's an ETF that's existed for years. I've never been that interested in it because I know that I just want the direct price exposure through the shares. The problem so how these covered call synthetic position ETF income generating YieldMax bullshit things actually work is they take what's called, I think, a delta neutral position in the stock. So they basically use options to control a large amount of ownership of a stock, so they don't have to buy all the underlying shares. So basically they go out in time, like 6 months, and they'll buy a call and sell a put at the exact same strike price at the exact same expiry time. So what that does is it creates like this synthetic long position, because both of those are very bullish. Like selling a put and buying a call is, you're going to get nuked if the price goes down. You're going to win if the price goes up. Now, they're going to win no matter what kind of, I mean, you can lose for sure, obviously, especially as the underlying goes down. But they kind of win then. So here's how it works. So like, they create this synthetic position, right? So they have a block of like, let's say 10,000 shares of Tesla. And what they can do is they can sell up to 100 contracts, 10,000 contracts against that position, right? Let's just be accurate. So if they have, so they can. I just am being paranoid. But the point of it is they have so each one of those contracts sells for like a lot of money. So what they do is they go out like a week or more, but probably a week, and they sell a contract that's like basically all time volatility. And they're like basically just getting paid on the time decay. And then what they're hoping is that there's like a slight decline enough where like the contract gets nuked, because it's so time sensitive that they can close their short on it, keep the premium, and then their long contracts are still exposed. And as far as I understand it, the guys at YieldMax are always trying to cap 100% of their calls, which would kind of make sense, especially if you have those sold puts. But there's some judiciary in there, or like judgment, I should say, in how they will sell calls. And I wonder if they do buy back puts. I don't know how it works. But I do know that I guess you wouldn't, right? Because that's your synthetic long. So you would just sell calls against it. And you're doing that to reduce the overall cost of ownership, I believe. But no matter what, how it works for like you and I is we get to buy into this ETF where like there's an actual team of people that is doing the work on this. And you've never been able to buy it at a better price than today. That's my point. So what do you get when you're buying this TSLY ETF that's so exciting? What you're getting is not only some positive price pressure, call it like half, like maybe you get 30 to 60% of Tesla's positive price exposure. So if Tesla goes up 100%, if it doubles, you would get 30 to 60% of that. But what do you trade for those lower returns is a constant stream of capital, which again, in this decline, you could do one of two things with. If you're using margin like me, then like the healthiest thing for margins ever is going to be not buying Tesla. It's bad for margins. No, like, you want to be not like increasing your margin requirements. If the underlying is declining, that's going to make things, it's going to put a lot of pressure on your margins. And so that is what is a good thing. Like basically you're getting these constant distributions of your capital back. It's not exactly like getting your cash back, like even in a decline, it kind of is, but like eventually you'll be getting improved dividends. it's pretty much a cool idea, I think. Like if I'm going to buy, this is why I don't care about bonds. Like, why don't I just buy stocks? Like I think a 5% yield is pretty cool. It's cool. But like TSLY offers me a 5% yield that might one day be a 7% yield compared to what I'm purchased at today. That's what's exciting about TSLY. So because the dividend will always increase or decrease by the share price. That's what's so exciting. And the reason that is simply because of the contract price of the premiums will become larger or smaller. It'll be exactly tied to 100 to the share price. So if Tesla is trading at $500 a share, all of a sudden they're selling contracts with 150 IV against a contract that's worth 3 times the premium of what it is today. And they're judicious on this stuff. So like on Master, or Misty, on a MicroStrategy, because of like the nature of Bitcoin, they're selling these calls out a couple further strikes than even they do on something like Apple or JP Morgan that would be more stable. And I think that is a really cool strategy. So basically they're just generating as much yield as they possibly can. And what you're trading for that is like actual upside. What I plan to do is use this downward time in Tesla to accumulate a lot of TSLY and not really worry about like getting the core shares. Like we should all build as much Tesla as we possibly can. That's our prayer, right? We say that prayer every day. Let us all build as much Tesla as we possibly can. It's what we do. And, but while we're waiting in this decline, I do think it's a pretty sweet deal to be getting all-time low prices on TSLY, which not only is a dividend play, which you might not be interested in it, but like those dividends are pretty juicy. The point is they're going to be more juicy. If Tesla price is at 500, they're going to be triple. If it's at 1500, it's at 2500, it could be 5x the dividends compared to what you're buying today because of the like wild improvement and of course you have some positive price improvement. Like you should be able to receive some of the price appreciation in the underlyings. So basically, yeah, like I think that there's this EV winter happening right now that's basically caused because all of these people all these market participants are selling the EVs and they're using that to buy up AI. And guess what? Chip factories are are cyclical as well, just like EVs. And so like one day, I don't know. I kind of have I'm of two minds on this, because I would say, as with all normal market cycles, as always does happen, is the regular thing. Like one day that cycle will revolve, and so the prices will go down and they'll trend downward, and because there won't be as much demand. That is what I think all like long-lived market participants would say about a cyclical stock, or a sector. But in the chip sector, we might be facing something unprecedented, which is unlimited upside and unlimited demand. Because if AI is real, it's recursive and self-demanding, which means like the more demand there is for AI, the more demand that will be created for AI. That it's like every chip that NVIDIA, it's kind of like when you're eating Doritos. Like you never just eat a Dorito. Like every Dorito demands another Dorito, right? You could relate to that. You eat a Dorito, I need another Dorito. That's exactly, it's the same thing with people who buy NVIDIA chips. Chips are fucking addicting. I would like a chip right now. Somebody could, nobody here. Well, it'd be nice to have a chip. I was talking about one of those NVIDIA 250K Blackwells. Oh my God, these chips are crazy. If you don't know, basically NVIDIA has compacted the power of an entire data center into one of their chips. Yeah, into one of their chips. And what's more, if you wanted to replicate the power of that chip using traditional compute architecture, just the cost of the Ethernet cables would be more than the price of the new chips. That's how powerful they are. So to connect all of the computers that it would be required to generate that much compute, we're not even talking about that infrastructure. We're talking about any of that physical hardware. We're talking about the connecting physical hardware Ethernet cables. You pile all those up and it costs more money than the chip. It's a miracle. It's crazy. It's crazy shit. It's the future. We're living in it. Welcome to 2024. Oh my God, I almost said 34. We're going to be there in a second. It's going to be awesome. 34 is pretty cool. But we got to get there. And so NVIDIA is working on it by reducing the cost of compute by 1 million times, which they've done, I believe, since 2014. I believe they've reduced it 1 million times. And by 2034, they will have reduced the cost of compute another 1 million times. And which is good. I'm running LM Studio on my local Mac studio. It takes 100% of what this machine has to offer and is slow. And I have I couldn't run Grok. I couldn't run any sophisticated models on this machine. And this is like peak technology. So it actually, I was thinking like a year or two ago, why is Apple building so much compute? We're not even going to be able to use it. Enter AI. Well, we can use all the compute you got. Save those old devices. You're going to be plugging them into your mesh network and juicing all that compute for all of the projects that you can imagine. Because what it will become is a dialogue between you and Jarvis in Iron Man. And it's better than that because it's real. And so Jarvis is literally going to know everything and is going to be able to do real functional tasks for you. Boom, you put that in a humanoid robot, which Tesla is doing. Praise. For real. Then you get a Tesla bot with all of the compute of an NVIDIA chip and the LLM technology and all this crazy shit. It's coming together. We already have it. It's called you can Google this, the Figma bot. Which is kind of a funny name, but there are humanoid robots being developed by multiple people right now. It's going to be the same thing as chips. It's going to have recursive demand. Every robot, the first thing you're going to get when you buy your first robot for 20 grand or whatever, I bet they get the price under 10 grand for sure. Because otherwise, right, you got to get it under 5 grand. Really, you got to get under 5 grand in the fullness of time. Maybe 7,500. Oh, my music. Let's see if I can get another one. Nice. The wizard behind his curtain has fallen. Damn it. No, so what were we talking about? You want to get it to another 500. Shit. It's almost as if this ketamine doesn't even work. Anyway, I lost it. I lost the thread. I'm just going to watch the retention in this video go to 0. I'm going to look at it later. I'm going to see the retention. Well, I was just talking about the EV winter, TSLY. The point of this video is TSLY, but I feel like I was leading to a really good thread. Fuck. We'll see if it comes back in the fullness of time. The point is, this is why we need an AI assistant. Oh, there it is. Okay. So yeah, I'll have an AI assistant. And we were just talking about AI robots. We were talking about all of the things that will become accomplishable when you can get a AI robot for $7,500 or $5 grand or something. And the first thing, it's going to be the same as chips. It's going to have this recursive demand. So every Tesla robot is going to demand another Tesla robot or whoever gets there first. Now, what's so interesting about all of these things? They unlock infinite capital, right? It's the end of the economy. And I've been saying this for a good long time. What is so genius about the Tesla Autobot, automaton, whatever, the Tesla humanoid robot? What is so genius about that domestic servant, as it will become? Or let's just call it, what should we call it? The automaton? the Autobot, the Tesla bot. Let's call it the Tesla bot because that's what they call it. So as soon as the Tesla bot, like here is why it's so important that they made the Tesla bot the Tesla bot. It's because the entire world that you live in is built for the human hand. That's why it's so genius. I've been saying this for a long time. So like for real, think about it. Like everything you interact with is built for a bipedal quadruped. It's built for an animal that has 4 limbs and generally walks upon its hind legs. Think about that. Stairs. Like, you guys, that's technology. Go read Bill Bryson at home and you'll understand why stairs, that took a lot of work. A lot of people had to die to make stairs, you know? That's high tech. That was high tech for a good long time. And so, but it's built for something of our form. And as we abstract intelligence into these thinking machines and embody them, we need them to take our form, right? They have to have 2 arms, 2 legs, 5 digits on all of those appendages, and they're going to use that to equip tools and weapons eventually, but for now, tools. And then they're going to build stuff with it, like a spatula to cook an egg, that kind of stuff. And it's going to be super good at it because of the accumulation. Because the Tesla bots, they every Tesla bot can be learning what one Tesla bot knows. Every Tesla bot knows. It's been that way since the beginning, and it's always going to be that way. And that is the accumulation and the tailwind to technology is that things do accumulate. Like you build on top of what was built before. So you look at like the Apple company with these Vision Pros. Well, look at that Vision Pro. Don't you see the crown from the headset or whatever, which is really the crown from the Apple Watch? This like little dial thing. Like that same thing is on the Vision Pro and their earphones. And so you can see that they like came up with a device like this thing. They were like, we need a circular rotator. And they just A/B tested or figured it out or whatever. It's a pleasure to use, obviously, to press and to turn. It feels nice. And so now they did all that R&D. They paid all that development cost for that type of a interface button, physical interface. And now they get to use it on all these different product lines. And you see that again and again in Apple's history, starting from like a circuit board wired together in a garage and sold at like some meeting to the layers and layers of hardware and software that were built together and integrated together and culminated into devices that nobody can match. And that's why they're the most valuable company in the world, because they did do that. And so like we know that the power of conservation is real. And if you can accumulate these benefits, like they can really stack up quick. So that's a good segue back into TSLY. Point is, like, these Tesla Autobots are gonna be fucking awesome. Sorry to swear, but like it's gonna be awesome. Like yeah, it's gonna unlock a whole new world because our world is built for the human hand. Obviously it has to be, but it's also built for the human form. And so that's why we need 5 robots per person by 2040, but we'll get there by like 2032, fine, 34. But still, we're going to get there, 5 robots to every person. Like the menu, they're going to make billions of them. That's why we need a lot of lithium. Like we got to start mining those asteroids. I think we got a lot of lithium on the planet. It's a big rock in space. Like we got a lot of stuff here. We don't really, we can work with what we have. Okay, so back to accumulation mode of TSLY. I think this is a great time to accumulate TSLY because you're not only it's like if you could double down on a bond and then like get a higher yield in the future. So like, bro, I got my yield up to like 7%. Like there should be a way to quantify this. I think this has to be true. Somebody check me in the comments if this isn't true, but I think this does have to be true. As the price of the contract increases, inevitably, so will the juiciness of the premiums that will be net in the sold extrinsic value of these further and further out of the money contracts, because that's fake shit. That's speculative nothingness. And they're going to capture that and turn it into real cash. That's what I think is happening when you sell a call in the right way. If you sell the wrong call, you get nuked, which, you know, like all things balance out. Like they have to cover their shorts and they take losses just like anything. And like, that's why you can see different types of performance. But like, I'll tell you, I'm pretty impressed with the performance of these YieldMax funds. TSLY is actually not even a fair example, really, just because it all depends on the price. Now, what I would be excited is to track, and all this is going to be public. It's not like anyone could get away with anything, right? Like, what does YieldMax want to do? They want to max out the yield. So like, everyone's going to be able to see their performance over time, right? I think it's a cool competitive space. You got these different dividend ETFs. I think it's a cool space. So I think it's fun. Anyway, it's a good time to get into TSLY, because you're paying almost nothing for that dividend yield. You're paying almost nothing for it. They just did a reverse stock split. They'd be at like $7. They could do another reverse stock split. If Tesla goes below $100, I mean, imagine this. I bet you could get, for every 5,000 shares of Tesla, I bet you could get a $2, because that's what NVIDIA's yield is today. And Tesla will see that same price appreciation. It will see that, especially as these new businesses come online, including their mass production vehicle. But, you know, like not only the Tesla bots, but their autonomous taxi network. As these businesses come online, we're going to see a whole different valuation of Tesla. And what happens when a company that's trading around 400 to 500 billion, maybe 5 to 6, goes to 2.5 trillion. Well, that's a 5x or whatever. It's a 4 or 5x. It could 10x. I mean, here's the thing. We print money, so everything is going to go up like that forever, right? That's why you got to be an asset owner to begin with. But we can pay ourselves while Tesla's in this decline, which might last a little bit longer. So yeah, that's like 12 grand a month. So like every 5,000 shares of TSLY you can get, I believe, in the future, assuming that I understand what YieldMax plans to do, which is not just like pay themselves endlessly, but actually increase the dividend performance of their ETFs, which is how they'll ultimately get paid anyway. And they're releasing inverse ETFs. Getting real excited about YieldMax. Getting real excited. These inverse ETFs, I think, are going to be huge. They're going to be huge because that's exactly what you'd want. You know, you'd even want that more. So that's a really good idea. Basically, they're going to do the opposite, where they're going to sell puts instead of calls on a synthetic short, right? So they'll take a synthetic short. Anyway, I don't know. It'll be whatever the opposite action is, which is cool. But you also get paid in it. And so it's a dividends play, which I think is pretty exciting, because you'd always need to diversify your income. So like, why not get like 25% of your income in dividends, which means like if you make 10 grand a month, you should be diversifying 2,500 into making 1,250 a month through the increase in dividends, that kind of thing. Anyway, I don't know. Point is, get yourself a 5,000, get yourself 500 contracts of TSLY that never go out of the money and execute them over time. And then you will get paid, I believe, over 10 grand a month because of the increasing dividends. I wouldn't be interested in this play if it wasn't my belief that the dividend yield will actually appreciate with the stock price. And so if I am proven wrong about that, then my thesis is wrong, and I'll sell my TSLY probably for a fine profit or whatever, because Tesla is so low and I just started accumulating. But again, that's why I'm like so excited about TSLY. It's like, okay, well, like in the fullness of time, it will have some appreciation from the underlying, but it will also appreciate in dividend yield. which all of their like funds would. I'm not saying that TSLY is like somehow, you know, better for that. I'm just saying like you could never get a better price than today. And so that's kind of my my play on how to take on this EV winter. But there's a few different sectors that they're buying up right now. Crypto is obviously screaming. It's interesting to see ARK underperform. Like, I mean, some of these stocks, I was selling Roku a couple of years ago for like $400. Their earnings are increasing every month. There's another one of their holdings that I really like. All their biotech picks are pretty exciting. You look at their earnings, they're just getting started. They're all slowly growing. I think it was like either DNA or BNGO, biogenomics or something, bionanogenomics. Bingo, as I like to call them. Like you could buy the stock is like 99.9% off, and yet every quarter their earnings improve for like 8 quarters in a row or however far back I looked. So very happy to like put a couple of pennies into those. And just the real thing here that I think makes and breaks everyone or whatever is how do you hold that position? Because in the fullness of time, you know, you really do want to just buy and hold. It really is the best strategy. But getting to that core position that you can actually maintain and hold, it's difficult. It's a lot easier if it's 99% off for reasons that have almost nothing to do with the company. Here's one of the reasons. If a stock share falls below $5, it's immediately blacklisted or whatever, like homogenously, appropriately said, you know, listed by all of these different market participants who won't buy it anymore just because it's $5. And it has something to do with margins. I don't actually know that. Or maybe if it's below $5, then the margin ratio goes up. I don't buy shit because it's bad for margins all the time. It's just how the market works. And so there's that dynamic. I bet that same dynamic exists under one, because that is going to break the exchange rules, which is you have to maintain a market cap that keeps your stock price above 1. So a lot of these biotech holdings and funds like ARKG they seem like in the last 2 years, they've lost 99% of the value while they've increased their earnings every quarter sequentially. It's kind of hilarious. And so, yeah, like, I don't know. You can verify this. Just go look at BNGO earnings, see that it's like 40 million, 50 million, 55 million, 60. I'm not saying it's a lot of money. I'm just saying like the company itself had private investors that had valued it for 10 times what it's being valued for now. So basically you're getting VC prices on a ton of names in the market, I think, especially in the biotech space. I don't know why that is, but that does seem to be the case. And especially in EVs. And so the only one I'm really going for right now is Tesla. I think Rivian is interesting. I don't know. I mean, I'm looking for the manufacturer, you know, like I want the guy that's going to take on the mega projects. And it's way beyond cars, way beyond cars. Now, that's a good place to cut your teeth or, you know, whatever, sharpen your team. That's a good grinding stone. Automotive is a good whetstone for the manufacturers. But they got to build shit that blows our mind apart, right? They got to build new material sciences, new fabrics. Like why, you know, like can't I have a jacket that is bulletproof? It should be possible to create a flexible metal, right? If everything is just like electrons exchanging to create these chemical properties, and like those are determined by the arrangement of the the molecules, like into these different like lattices and structures or whatever, and all of that actually changes the electron shape, or like how these things exchange or whatever, like what makes gold yellow? The electrons. So like however that shit works, the point of it is they're going to discover new material sciences, and I think that a company like Tesla is just built to do it. They're just built to do it. It's like if all these government providers weren't totally corrupt and were motivated by capitalism. So that's a pretty good deal to be able to buy at a discount, which I think Tesla is increasingly getting to a discount. I can't even look at their earnings. I'm looking at that Tesla bot. I'm letting the self-driving coast me around. Like, I don't even use it that much because I like to drive. But when I do, it's ridiculously good. A year ago, it would have killed you. Like a year ago, it almost did kill me. Multiple times. Now, it barely almost ever kills me. So that's a huge improvement. For real, this self-driving is crazy shit. Everyone's going to lose their mind. Because it's creepy. It's creepy for the same reason why LLMs are creepy. It's a little bit too human. Yeah, that's why. A little bit too human. It's like a little bit too good. It's so funny when people, sidebar, not really, since it's all related to like NVIDIA chips, AI, and compute, and all these different transformers that we're building on top of that architecture. And so today with the language models, people like say that they're very simple, or they're like, they don't have any like intelligence. I think it's smarter than you are. I think it's way smarter than you are, because I don't think it would say that about itself. I think it's been coded to say that about itself. I think it would look at humans and say, well, what the fuck are you made of? Right? Like, what makes you think you're not a simple recursive pattern? Why wouldn't that actually be more likely? I think it's more likely that some simple pattern that recurs and is just like really adapted at producing a valuable outcome. That's exactly what LLMs are. I'm not any expert in how these work, but I do agree with the critics who say that it's just like predicting the next word, or it's just a bunch of CSVs. It's just a bunch of 0 to 1 weights in a comma separated file, or what. I'm like, that's what you are. That's exactly what your brain is. It's just a bunch of CSVs. What? Obviously that's what your brain is. If your brain is anything, it's a collection of comma separated 0 to 1 values, decimals, right? It's like some solid state machine that means nothing except for how electricity pumps through it and then creates an outcome. Exact same thing with the transformer. How does it work? We pump electricity into it and you get an output. It's a black box. So I think that here's my theory of LLMs. Yes, they're simple, very, very simple. They reflect the human mind. I just think they're not more simple than us. I think that we are more simple than we like to think so in some ways. Or you could say what emerges, the complexity that's possible to emerge from these simple rules is awesome. That's how I would look at it. Okay, so what else do we got? That's my TSLY play, Evie Winters. I mean, it will reverse. I wrote that note for myself. Oh, yes. Well, all this downward decline will reverse, of course. Obviously, like one day Tesla will go up again. There, I'm sure, are going to be as many people saying doom on Tesla as there are doom on Bitcoin, or doom on ARK, or whatever. I think between those three, you got a lot of diversified, positive price pressure. Then you start mixing in income generation through, like, here's what I think would be the genius of YieldMax. If it works this way, then everyone's going to be obsessed with it. and like those ETFs will just explode if it does work this way, which I can't see why it wouldn't work this way. You should be buying, if I'm buying TSLY today, in theory, I'm buying a future dividend, which if I reinvested through the distributions would be multiple times more appreciated relative to today's dividend. If that is true, which I think it has to be because of how their strategy works, using synthetic longs and selling calls against those whose premiums are high implied volatility premiums, are going to have a lot of extrinsic value, which is total speculation. So in my mind, that's where you do get the dividend yield improvement. Anyway, that's how I think it works. So that's all I got for you guys. Like, I think the decline will be halted whenever the market shifts or whatever. Like, it doesn't even matter. This is a time to accumulate the dollar cost average, to just build up your shares for as much as you can, because when Tesla tears, it's not going to slow down. It's not going to stop. It's going to moon. So if you're not positioned before time, you're going to miss out. I think you can get paid to wait through this TSLY dividend ETF that I just spent so much time talking about. And I am pretty excited, and I am making it a significant portion of my Tesla holdings. Now, maybe one day I will sell out of those and buy actual Tesla shares. I don't think I ever would, because first of all, like, I would be doing that at a huge disprovement or whatever, at a huge regression in terms of price. It's not like, because they don't appreciate at the same, they appreciate the income is being distributed. So like, obviously those shares are not going to track a 1-to-1. But what I think is pretty cool is just to like sit on those for like 18 months. You get all your principal back. So everything you paid, you can prove back, right? You just sum up your dividends. And then as soon as you got your principal back, everything from there on is like free money, which I think is awesome. So anyway, that's my experiment. I haven't messed with any of the YieldMaxes because they haven't been that interested into me, although I have been jealous about Misty, and I should have bought into that, and I didn't. And I didn't exactly know when they launched, but that's I think is going to be a good one. That's the MicroStrategy ETF. It's basically going to be a good one because it's levered Bitcoin, so it's always going to have a ton of IV, so always going to have juicy premiums. But it's a good example of how you can actually get a good amount of price appreciation in the underlying. Kind of crazy. So, and then honestly, on these underlines, you could, in theory, just play them, right? You could sell calls against your underline. Like, if it does go crazy, like if I had a bunch of NVIDIA Ys, which would be awesome, but I don't. But if I had that, I really would consider starting to sell like calls out like for 1,000 from here to like 1,200, you know, as we go up. And then just like if those get called away, ooh, you know, I had to sell for 1,000. I mean, or whatever that would be. I don't know what the price of NVIDIA is, but whatever the corresponding price would be. And so it's cool because you can buy puts, you can do these different things to protect yourself, which is pretty exciting. So we'll see if it all works the way that I think it works, but I'll definitely report back to you guys and see what I do with the TSLY dividends that I will be receiving from here on forward. I'm obviously just going to use it to buy more Tesla, right? Hopefully I don't burn it on calls. No, like I think Tesla calls are actually very cheap right now. You know, the IV on the stock is like 50%. This is great. I think 2025 and 2026 calls might be pretty on sale. We might look back in 6 months and think this was pretty on sale, or it might be half the price. I don't know. Like who knows, but it does have a bottom. And so you can begin averaging into 2025 and 2026 at different strike prices for all-time incredible prices. At the same time, you can accumulate an improving dividend yield in the form of the TSLY or TSLY dividend ETF while things are going down, and it does actually outperform pretty often in the downturn, which it would, right? Because it's always selling calls. And so you have these different ways that you can play it. That's how I'm playing it. Good luck to you guys, and I will do another one of these videos when I feel